Will the $100 bill in your hand buy the same amount next year? No. And this invisible game of theft is the modern financial system's greatest secret. You work hard and save, but every night while you sleep, an invisible force is quietly stealing value from your wallet. It's called inflation. The freedom $100,000 in savings could buy 20 years ago now requires nearly $171,000. So why are you still playing by the old rules? Why are you handing your hard-earned money over to that invisible thief by keeping it all in a bank savings account? We aren't promising any get-rich-quick schemes. We will show you how America's wealthiest individuals are quietly building their fortunes using patience, algorithms, and a century-old code. This isn't luck or secret information, it's math that you can use right now. Get ready because the biggest shock of your financial life is coming. Chapter 1. The Invisible Tax Game. Character Introduction. Meet Alex, a 28-year-old software developer from Texas. Despite a good income, he feels a sense of emptiness at the end of every month. Narrative. Alex dreamed of hitting his first $100,000 in savings. When he finally hit the mark, his joy was short-lived. He noticed the price of his favorite coffee rising, his rent increasing. Everything seemed to be eating away at his savings. The Information Hub. Defining inflation. Inflation is an invisible tax. When the Federal Reserve injects more money into the economy, the purchasing power of every existing dollar decreases. U.S. data point. The historical average U.S. inflation rate is around 3%. This means if you keep your money somewhere that returns less than 3% annually, you are effectively getting poorer. The shock. The average savings account interest rate is around 0.5%. Your savings account is not preserving your money. It is actively eroding its value. Conclusion. Saving money is not enough. You must put it in a place where it can beat inflation. Chapter 2. Ownership is the real game. Narrative. Alex realizes he needs to put his money to work. But where? He dreads the trading floors of Wall Street. It feels like gambling. Then, his experienced friend Daniel explains the true secret of the stock market. The information twist. Stocks are not gambling. Definition of a stock. When you buy a share of Apple or Coca-Cola, you are not buying a slip of paper. You are buying a small ownership stake in their future profits, their brand value, and their growth potential. The double earnings. 2 ways to earn. Capital appreciation. The value of the company you own increases, so the price of your share rises. Dividends. Companies regularly pay you cash from their profits. Primary versus secondary market. IPO versus trading. The primary market is where the company raises capital, IPO. The secondary market is where investors trade shares among themselves, meaning the money you spend goes to another investor, not the company. Historical fact. Since 1871, the S&P 500 index has delivered an average annual return, including reinvested dividends, of nearly 10%. This number easily beats inflation, 3%. This is the code the wealthy use. Chapter 3. America's Hidden Wealth-Building Machine. Narrative. Alex learns that the U.S. government has special vehicles designed to help him build wealth, yet 99% of people failed to take full advantage of them. Crucial U.S.-centric details. 401k matching, the free money. This is the first and biggest shock. Your employer adds a matching contribution to your 401k. If your boss matches 5% and you contribute $5,000, they will give you an extra $5,000. That's a 100% guaranteed return. The Roth IRA. Why is this the best wealth-building account for young people? You invest money after tax. All your investment gains can be withdrawn in retirement completely tax-free. The script must emphasize the power of tax-free growth when gains are massive in the future. Traditional IRA, or 401k, these accounts let you invest money before tax, giving you a tax deduction today. Conclusion. The first step to building wealth is maximizing the use of these tax-advantaged accounts. They level the playing field so that the government is essentially on your side. Chapter 4. From Stock Picker to Alchemist. Narrative. Alex thinks he now needs to stay up all night reading company balance sheets. Daniel then gives him Warren Buffett's simplest advice, the index fund. The astonishing simplicity. What is an index fund? It is a fund that tracks an entire market or a specific segment, like the S&P 500 index fund, which tracks the 500 largest U.S. companies. Diversification. Buying one index fund means instantly owning a piece of hundreds or thousands of companies. If one company fails, the others protect your portfolio. This is the real-world application of don't put all eggs in one basket. Warren Buffett's advice. The chairman of Berkshire Hathaway, an investment legend, has repeatedly stated that for most people, investing in a low-cost S&P 500 index fund is the best strategy. Why is this the best? Individual stock pickers typically cannot beat the index fund over time. Index funds also have extremely low fees, expense ratios, which saves thousands of dollars in the long run. Video message. Stop trying to be a stock picker and wasting your time. Be an alchemist. Capture the market's overall growth. Chapter 5. The Double-Edged Sword, Behavioral Finance. Narrative. Alex bought a single stock in 2019. In March 2020, when the market crashed due to COVID-19, he sold all his shares out of fear at a low price. Months later, when the market hit all-time highs, he bought back in at a high price, losing big. Humans are their own worst enemy. Fear and greed are the two primary emotions driving the market. Beginner investors sell out of fear when the market drops. They buy in out of greed when the market is peaking. They end up selling low and buying high, the exact opposite of what they should do. Dollar cost averaging. This technique eliminates emotion. It involves investing a fixed amount of money, for example, $300 on a fixed day every month. When share prices are low, you automatically buy more shares. When prices are high, you buy fewer. Over the long term, it smooths out market volatility and lowers your average cost per share. Video message. Your greatest wealth-building strategy is to be boring. Automate your investments and stop checking the market's daily swings. Chapter 6. Modern Tools, Automated Wealth. Narrative. Alex realizes everything is easy and automated now. You don't need thousands of dollars to start investing today. The advantages of the modern age. Fractional shares. You used to have to pay the full price for an expensive stock. Now you can buy a fraction of that stock with just $5. This is a huge benefit for small investors. Robo-advisors. These platforms automatically create and manage a diversified portfolio based on your age, goals, and risk tolerance. It's completely automated and free from human error. Easy account opening. Opening a brokerage account today like Fidelity, Vanguard, or Charles Schwab is as simple as opening a bank account. You can start your journey to financial freedom in minutes. Actionable steps. Maximize your 401k match. Open your Roth IRA or traditional IRA. Select a low-cost index fund, for example, VOO or FXAIX. Set up monthly automatic investing using the DCA strategy. Chapter 7. The Ultimate Financial Freedom Formula. Narrative. Alex, now disciplined in utilizing Daniel's advice, has automated his investing and mastered his emotions. 5 years later, he looks at his portfolio and sees an incredible number. He is astonished that such a simple process took him so long to start. Conclusion and final lesson. The formula. Time plus compounding plus consistency equals freedom. Freedom defined, financial freedom isn't about being a billionaire. It means reaching the point where the returns generated by your investments cover your monthly expenses. This return gives you back your most valuable asset, time. Final message. What will you do tonight? Will you hand your money over to the invisible thief of inflation again? Or will you execute the century-old code that the wealthiest people in the world have been using for generations? The decision is yours. But remember, the sooner you start, the more powerfully the math of compounding will work for you. Take the first step now.